Man, investing is hard. There is a lot of information out there. There's too many people talking about investing. There's too many books to read. There's too many articles and websites. There's a lot. And it's scary because you look at all of it and it's just like information overload everywhere. And condensing it down to make decisions is incredibly difficult to do, but it's probably one of the first steps in actually building a plan. So today I'm planning on sharing a very high level overview of what I'm doing in 2020. So basically, what this means is I'm looking at my income based on my salary for 2020 and saying what percentage will the distribution be among my investments, among taxes, expenses, cash. Super high level. Because one of the biggest variables here is if and when I purchase a house. That's going to affect things a lot. It means that a smaller percentage is going to go into investments most likely, but hey, that's how it will be. So we'll see what happens there. I've made this very simple overall, and you'll see in a moment when we dive into it. I just want to do an update on the account at the moment, or all my accounts, just to say where we're at. So at the moment, this is end of the year, December 2019. This will be the last episode. Next one will be in January, so it'll be in 2020. But at the moment, we're at 93,581. Not a bad year. I mean, we look at January, the beginning of this year, where was I? And I was at 43,388. So we've over doubled this, which is pretty cool. And I'm proud of that because I started the year at a salary that was a lot less. I think it was around 57. And then maybe in April, I believe, is when the bump got taken into effect. I got promoted, which was pretty cool. So now my salary, and it's on the next page, so I'll show you guys in a moment, is 72,750. So with that, combined with the fact that I still live at home, I'm able to save a good chunk of my money. And I think with the amount of times that I said no about spending money and instead saved it and invested it, I'm very happy with the performance overall. And then obviously the last piece there is that the market has done tremendously well in the past couple of years. So I've been lucky with the amount of money that I put in and how much it's grown. So overall, happy with this. Good year overall. Learned a lot, not only about investing, but also within my career, what I do. But overall, good stuff. So let's jump into what we're doing in 2020 here. What's the plan? So, like I said, my salary, just over $72,000. Pretty good amount of money. I mean, I pay a lot of money in terms of transportation and travel because although I live relatively close to my place of work, I'm in a high cost of living area, so parking is incredibly expensive. And that's part of the reason why I've left this very large piece of cash and expenses of about 39%. Now, the reason for that is twofold. First off, because of the current expenses that I have, some are factored in from how I'm thinking about them, some aren't. So what I mean by that is this automatic things that are taken out of my paycheck for expenses, as you can think of like insurance and stuff like that, as well as parking I had mentioned. So those take up some, and maybe in the future I can break those out. But really the way I'm thinking about it now is until I do get into a house, I don't really have a good understanding of what my future expenses will be. So I'm bucketing that together with cash. So what that means is that for the moment, of that 38.8%, a good chunk will go to expenses, the current expenses that I have, and I'm expecting that in the future, a very large piece of that will be going into expenses for the house. So that will take the form of not only the closing costs and the down payment, but also the monthly mortgage payment, utilities, and also private mortgage insurance. So there's a good amount that will be in that bucket. I just can't say for sure what it's going to be. Now, based on this, the cash and expenses bucket, I'm pulling in about $2,300 per month. Once I'm in a house, most likely at least $1,500 of that, probably closer to $2,000, is going to be going towards that mortgage payment, along with those other necessities, other expenses that I'll have like utilities. So that's a huge chunk of my income distribution for 2020. And I'm a little bit annoyed that I can't make it more specific, but that's how it is for the moment. I think once I'm in a house, it might be helpful for me to break those out, and I can share that with you guys when I have a chance. Now, aside from that, the other big chunk is taxes, of course. As we know, the government likes to take a good amount of what we have. I am pretty conservative, so I just calculated this my last paycheck, and it came out to 28%. Most likely, we'll get a good chunk of this back, so I don't know what exactly my tax bracket is. I'll probably have to calculate it, but I'm sure it's less than 28%. This is conservative. I'll get some money back, which would be good. Aside from that, the rest actually is all investments. So we have the Roth 401k. I had that around 9 or 10%, but for 2020, that'll be bumped up to 15%, and I can share with you guys what I'm actually planning to invest in. I have the Roth IRA, which is 8.2%, so that I can hit the max for this for the year, which will be $6,000. Now, this one's interesting because I just set it up. So this is a brand new account for me. I've never contributed to a Roth IRA, and my plan at the moment isn't fully baked. I'll most likely at least start off investing in ETFs and index funds until I have a better grasp of a couple individual stock picks that I want to select. But for the moment, that's what we're doing. I'm also considering doing a lump sum investment for 2019 because I think I have till April to invest a Roth IRA lump sum for that year, even though it'll be in 2020 at that point. So I'm considering that since I have a good amount of cash on hand. I just don't want to put that money into the Roth IRA and then need that at some point later on. So we'll see what happens. And then the last piece, which I kind of like a lot, is the employee stock purchase plan. So this is up to 10% of my income. That's the max that we can do. What's nice about this is that it's a 15% discount either at the starting or ending of a 6-month period, the lower of those 2 points. So say if the stock price was 100 at the beginning and then 90 at the end, not only would you get the 90 at the end, but you'd also get it for 15% discount on that, which is pretty cool. So I see that as almost, I done the calculation, but if you invest fully for a year, it's like a 1.5% bump in pay, basically. So I take advantage of that. I still have all that stock, as you can see in my financials. Right now, it's at about $7,000, but that will be granted at the end of January. So it'll probably go towards the February amount. So I'm hoping that bumps it up to over $10,000 in that E-Trade account, which is taxable. But we'll see what happens when it comes to that point. I'm hoping that might be get me over the limit to 100,000 if we get lucky. We'll see what happens. So overall, those are the distributions. Like I said, I really wish I could be more specific with the cash and expenses. I track my expenses to the T. Every single one. I write it down. I have the Google Sheet literally on my iPhone, and I write down every single expense I have so I can tell you what my expenses are right now, and maybe I'll share that in the future. But I'd say they're probably between like $500 and $700 a month, mostly going toward things like parking and gas, going out with friends, food, stuff like that. But once I get a house, I'll be able to write that out a little bit more clearly, and I have clear buckets for what will go to cash and what will actually go to expenses rather than just saying 40% is grouping them all together. It just seems the best way to do it for the moment. So aside from that, let me jump in and I can share what I have in the Roth 401k or what I plan to do in 2020. Now, right now, I'm about 50% in large cap stocks. This is just an index fund that Vanguard offers. Very low expense fees. So I don't know, it's grown pretty good over the past year. It basically just tracks the S&P. So it's a pretty simple thing to invest in. Because like I said, I'm too young to be picking individual stocks at the moment until I get a better handle of what I want to go after. And like I said, I'll probably do that in the Roth IRA because obviously you can't choose those options in the 401k. Aside from that, we have small caps and mid caps. Now at the moment, the small caps are a lot less than 20%. So by the end of 2020, I'm hoping to be at this breakout, but that's not the case at the moment. Now you'll also notice that I don't have any bonds here. So that might be something to consider, but since the time frame that I have my investment horizon, I mean, since I'm 25 right now, I have at least 30 years, right? So with that said, I'm pretty confident with this breakout. I think in the future I'll probably beef up on the small caps even more, and I'm even considering doing that, like small cap value in the Roth IRA. So we'll see what happens there. This is my initial approach, and like I said, I also bumped the Roth 401k income distribution up to 15%. So 15% of my income is going towards that. What's nice is we get the company match, which is good, so I'm taking advantage of that as well. So it's like a little boost. Now, like I said, I'm not outlining what I have in the Roth IRA because I just opened it, and I'm hoping that over the next month or so, I'll have a little bit better idea of what I want to do there. If I want to do a lump sum for 2019, maybe that will happen. Regardless, I'm going to be putting $500 a month into this. Now, the last point that I wanted to make and how I kind of opened up this video is that there's frankly too much information. It's information overload. The more you read about this, the more that you watch YouTube videos on it, it gets so confusing because there's so many options, right? You could invest in stocks, you can invest in bonds, you can invest in real estate, you can start a business, you can invest in your education. There's just so many things you can do. And the way that I would think about it, or the way that I currently think about it, and probably the way that I'll always approach it in the future, even if I have a different perspective or a different level of knowledge around investing, is that it's all about what you control. It's control. That's what it is. So think about this. What is it that you actually control in investing? In most cases, we don't really know whether these businesses are going to go up, down, or sideways in terms of their stock price, right? But what we do know is how much we can save. We have control of that. We have control of how much we invest. We also have control of what we invest in. So, in terms of my level of knowledge from where I'm at, I'm 25. I've only been investing for a couple of years. It's been a bull run, so I haven't really seen anything too bad. I invest in things that are well diversified. Large cap, mid cap, small cap, all very simple, straightforward, low expense fees from Vanguard, really simple stuff, and it's 401k, Roth 401k for the most part. Now, I do that because I simply do not know enough about analyzing securities yet. I don't. And I think over the next year, I'll probably spend some more time trying to learn about how to evaluate a stock's value. It's difficult to do. I've read a good amount about it, but I still don't know enough that I'm confident in doing it. And I'm going to stick with what I do know, what I do believe in. I believe in America's economy. I believe that in the long term, all these asset classes that I'm currently investing in will have grown. And so far that's worked out. Obviously we're in a bull market here, so a lot of things are working pretty well. But that's my perspective on it. If you feel that you're overwhelmed with the amount of options out there or the amount of people trying to tell you what to do, that you should do, only dividend growth investing or only real estate or only in bonds. I don't know who's saying that, but the point is you need to step back. You need to think about what you control directly, and you need to focus on those things only. So I focus very strictly on how much I save and how much I invest. I get to determine those, and it doesn't matter what happens around me. I control those directly. Like I said, I can't control whether what I pick for investments goes up or down, but I can control how much time I spend on research, which, like I said, is the plan for 2020. Get a little bit better with understanding how to value businesses. Because if I want to make individual stock selections in my Roth IRA, that's probably going to be the best way to do it. Actually understand what I am investing in and knowing that I can select value rather than just making these haphazard predictions about whether a company is going to grow or not. So we'll see what happens. New Year starting. For everyone out there, enjoy your New Year's Eve. Have a great time. Go out and party. Do whatever you'd like. Maybe just read up on some stocks or investing. Totally up to you. But thank you so much for tuning in. If you want to follow along, this is a weekly episode. I share my net worth. It's fun. I have a good time, and we're building a pretty cool little community here. So have a great week. Enjoy New Year's Eve, and I will talk to you then.